Well, thanks very much. So welcome, this is a night about fintech and millennials. First off, check, can you hear me at the back? Is this mic working? Great. Second off, I just want to run through a few dates for you. Anyone here born between 1965 and 1979? Okay, I'm on your side. Cool. Apparently we're too old for tonight, we're Generation X. Anyone born between 1997 and 2015? Okay, we've got a few. You're also too young for tonight, but we'll let you in. Millennials, okay, there's a bit of give and take around this, it's approximate. Millennials, anyone born 1980 to 1996? Okay, that is the majority. Tonight is all about you. So fintechs and millennials. This is about fintech by millennials. This is about fintech for millennials. We've got some great speakers coming up tonight. So the format for this is going to be, each of those 4 speakers comes up. They've got a 10-minute kind of slot to come in and talk to you about their take on fintechs and millennials. Can we have a big hand for the folks on the front row, please? You will get to meet Sean, Max. So can we have a hand for our first speaker, Max?
Cool, hi everyone. Where should I stand? So, my name is Max. I'm the founder and CEO of Finimize. Just out of pure curiosity, who has heard of Finimize before? If you raise your hand. Some people, cool. So yeah, basically, I guess I'll just talk a little bit about what we're up to, what our vision is, and why we're doing this. So maybe people can remember when they started their jobs. Your first job probably, you were really sort of hustling. You were living in a house with like 4 housemates and sharing a bathroom, and then eating ramen every night. And then one day, you look at your bank account and you have like £0 in there. And then a couple of years later, you look at your bank account and you realize, oh, fantastic! I actually have a little bit of savings now. And then you start thinking about all these things like, okay, I should probably be investing, or I should probably, start thinking about my retirement, or start thinking about buying a house. And as you start thinking about all these questions, you slowly start sort of paralyzing because you freak out over making the wrong decision. And essentially that is where Finimize comes in. We want to help you understand a bit more what you should be doing with your savings. Do I have a clicker, or how does this work? Okay. So this is me. I lived in Switzerland here, and I was basically that person with those questions in my head. In my mid-20s, late 20s, thinking about, should I be investing or should I be saving? What should I be doing? And I was setting up a company there, and then kind of just one day looked at my bank account and was like, okay, cool, I actually have some savings now. So then I started thinking, all right, what do I actually do with these savings? And pretty quickly I had to admit to myself that I was pretty clueless. So I started asking friends of mine, a lot of them were bankers here in the city or on Wall Street, what do you guys actually do? And a lot of them basically told me they have the same problem, they just had more money on their savings account. So then I was like, okay, I'm just going to go get professional advice. I didn't have enough money to go to a financial advisor, so I just went to my bank, retail branch. And I sat down with the banker, and the banker basically asked me a bunch of super generic questions, and then ultimately laid out all the brochures of their own banking products onto the table. And I thought to myself, okay, this is actually a sales pitch. This isn't really any advice for me. So I was pretty frustrated by that, and I went back home and I started Googling, okay, is there a solution that could provide me with independent and holistic financial advice? And I just couldn't find anything. And so I started digging a bit deeper. I found out that 86% of millennials actually save each month, but they keep more than 50% of those savings in cash because there isn't a suitable way for them to get financial advice. And so that was kind of the genesis story of Finimize, and now the way we've tackled that has been a little bit unconventional in the sense that we've started building a community first, which was primarily, or continues to be primarily, around content. And the idea there basically is that we now have a little more than 175,000 people who engage with us every single day, and we explain to you what happens in the world of finance, that day in 3 minutes, not using any jargon, and most importantly, explaining to you why the hell should you care. So why the hell should you care if interest rates or inflation go up? And that's been really well received and has allowed us to build this community. We have basically anybody from sort of students all the way to some really famous billionaires who I can't give you the name of, unfortunately, who read us every day. But the target group really are people in their late 20s, early 30s, who have built up a little bit of savings and are now thinking about what to do with their money. I don't know if we have time for this video.
Yeah, of course.
Cool, so that kind of gives you the gist of... Oops.
If you love what you do, this is pretty casual. You warmed up?
I've read Finemize, so...
What?
Finemize is the 2 most important finance stories from yesterday, condensed into a language that's accessible to everyone.
Accessible to everyone. That's cute.
It's actually really helpful. Do you want to have a look?
I bleed finance. Most people just use it as a figure of speech, but if you were to cut me right now, I'd bleed.
Wait,
Cut me.
What?
Go ahead, cut me.
No, I'm not going to cut it.
I like you, kid. Why don't you put that phone down and we do a big boy warm up now, alright? On me. Come on, boy.
Recording. Ready when you are, Tom.
Thanks.
Did you not get our email? I'm afraid you didn't make it past the first round back in May.
I know.
Well, I mean, you really shouldn't be here.
So we did that video back in 2016, basically to just kind of give you a gist of what we're doing. And kind of the interesting thing, I find this pretty fascinating actually, this is not to really blow on the horn, but like, you know, we don't spend any money on marketing, it's all primarily organic. And what we found was that of the people who refer us to their friends and tell them, hey, go sign up to Finemize, actually 80% of those people use the word love when they talk about us. And to me, the first time I saw that was kind of crazy, because at the end of the day, we do talk about pretty dry and boring stuff like interest rates and inflation and stocks and economy. And yet you have people, you know, working here at a bank, wearing our Finemize socks. We have literally bankers coming in with handwritten notes and chocolate to thank us for the work that we do. And so it's been kind of a crazy journey with the users. And so we're now basically taking this community and we're saying, hey, it's awesome that you understand what's going on in the world of finance. If we go to the next slide. You know, what's way cooler now is to sort of help you take action on that and help you figure out what you should be doing with your own money. And that's why we're building this app, and we've really been sort of iterating together with our community. We have a waiting list. I actually don't know the exact number right now, and we're sort of very, very slowly letting people on, and you know, getting feedback and changing the product, and ultimately trying to answer the question: what should you be doing with your savings? So I'll give you a little bit of an overview of kind of where we are today. You know, it all starts with more content on the app. We have more specialized content, so we have specific content around markets, we have specific content around cryptocurrencies. You can kind of engage with that directly in the app. We have what we call upskilling content, so if you want to understand a bit more like how do I invest in cryptocurrency, or how do I invest in stocks, or how do I don't know, what are different strategies to investing. You can read all that content in the app, and on top of that we have real-time alerts that will keep you up to date with what's going on in the world of finance, so that you're always on top of it. And then basically we'll show you, you know, how are you progressing. One of the key features that we have is obviously in the email showing you the reading time, so our promise is never more than 3 minutes. So we'll show you how up to date are you on markets, how up to date are you on crypto for that week. And then within the stories you can react to it, you can also see how are other people reacting to it, so that's kind of interesting. Are they liking this? Do they think this is a positive trend? Do they think it's a negative trend? On the next slide. And then lastly, the thing that we're building now is taking all of the information, increasing financial literacy, increasing sort of the empowerment element, and then basically saying, awesome, now let's take action. So maybe the last point, why are we doing this now? I think there's a couple of things in terms of timing. Next slide, please. So first of all, us as a millennial generation, we're turning 30, and that's typically when you start seeking out financial advice, because that's when you start getting married, you start getting a house, start settling down a bit, that kind of stuff. And on top of that, we see that this is the greatest transfer of wealth in the history of mankind. So what that means is that in the US alone, the baby boomer generation is handing over $40 trillion, not billion, but $1 trillion from a baby boomer to the millennial generation. And it's estimated that 80% of those assets will not stay with the current financial advisors. So that obviously begs the question, where do these assets go? We obviously have a very particular take on that, but so we think that makes this time specifically really interesting to build millennial products. And then lastly, we kind of see the opportunity in kind of tying all the things together. The fintech revolution has really been amazing, and there's been a lot of different verticals that have been created. I think the next frontier is really then about tying those things together and giving you, as I was saying initially, holistic and independent financial advice. I think the infrastructure is there, the key sort of market drivers are in place and are happening. Either us or somebody else, I'm very certain, will take that market position. So that's kind of how we think about the market. Happy to talk about it a bit more. Also, super hot up here, but I hope that was a good intro.
Perfect. Thanks very much. We have a hand from Matt.
Hello, my name's Gibran. I'm the CEO and founder of Cap Ratio. Under the guise of my and credible advice of my legal team, I am not allowed to show any pictures of our platform just yet, because we are still being FCA regulated. So we have to kind of keep it on the radar for the time being. So instead, what I thought I'd discuss, which is quite important, and I think many of us in the room should really focus on, especially those of you, but hands up who've got a company or starting a company in fintech. Yeah? Great, okay, that's good. So we are robo-advisor, so what that means is we have a algorithm that actually takes your risk profile and calculates it into a portfolio that will manage your portfolio over a period of time. Next slide, please. So this happened last year, right? And what I'm trying to discuss here is the why. Okay, I think what we've got here is great guys, great brains, but what I'm trying to discuss and get through to today is the why we do our business, why we do this. What is it about fintech, or what's it about our business that's going to drive us to propel us to success? So when that happened last year, and my previous business was around the corner, so I had a previous business in Old Central Road, so I used to walk past Brentford pretty much nearly every day. So when I was discussing to my team what is the cause and why we're going to do this fintech business, we kind of knew that it was going to be quite special, but we didn't really understand what our market was, or who our audience was going to be, or who we're going to serve. And this happened. Sorry, am I...
I'm in the middle, yeah.
Is that good? Is that good, everyone?
It's good filming.
All right. So this happened. So I realised that when this happened, we immediately realised that there was a massive division of wealth in the country. The borough of Kensington Chelsea is one of the richest in London, as we know. What we had here was a third of people who were under the age of 40 were immediately displaced, which is awful. And we then started to look at, right, what is it about our audience? What is it going to make us special that's going to divide us from being an average, ordinary sort of fintech company? And we realised that it's actually the fact that, can I have the next slide, please? This is the face of banking 50 years ago, but really, it is currently the state of banking as it stands right now. So, my whole point of it, my whole point of what I'm trying to discuss is culture. Culture is fundamental in anything you do in terms of how you appeal to your audience, what is it about you're doing to serve your audience. And for us, if we're going to try and provide a financial platform to a new breed of investor, then this face, this kind of 50-year-old image is not going to work, because I don't know any bank right now that looks like that, actually. I mean, that's quite old, but that is currently what was the stable block, and I've been in banking sort of 15 years now, that was what the old banking used to look like, you know, kind of middle-aged guys sitting on a table dividing up the world between themselves. Fintech now, what I love about Fintech now is the fact that it's so diverse, and I think culture is really, really important in terms of serving your audience. What does your audience look like? I know for a fact that my audience not really looks like that, really. Can I get the next slide, please? So the fact is that the incumbent market for millennials at the minute, for some reason my picture there, start again. The market at the minute, right, let me start again, let me take a breather, sorry. A bit nervous, a bad day today. Right, here we go, let's start again. Let's go, let's warm up, right. We look after the underserved market. So basically our marketplace is for the kind of non-white or kind of aesthetic market for people in London. £853 billion goes to the HMRC, which is for the lower income or average earning groups. That's completely a market. We don't really go for the kind of high net worth groups. We don't go for the kind of wealthy sort of middle class group. We go for those. Sharon, 32, 2 kids, works as a hairdresser. That's our client. Our clients have no idea about banking, no idea about finance, but they are financially aggressive, which is the kind of audience we like. This money, 850 billion, is a third of UK GDP. UK GDP at the minute stands at 2.6 trillion, okay, of which the underserved market doesn't see any of that service. So the majority of the services that go to the majority of the GDP generators are all the kind of high net worth guys and the guys in banking and the guys who work in the city. Next slide, please. Culture. Oh, I love this job, I love it so much. Hands up who saw the Nike advert? Hands up who liked the Nike advert? Hands up who didn't like the Nike advert? So why? So let's get the debate. Why didn't no one like the Nike advert? What was it about that I didn't like particularly?
It's a bit too try hard in my opinion.
Do you think so? Yeah.
Could you hit a bit too try hard was the feedback.
So the story behind the Nike advert, which I kind of like, was the fact that Wyden and Kennedy, who are the advertising agency, were given a brief by Nike. Who said, look, don't worry about the rest of the world. Focus on the core audience, focus on London, and make an advert that's going to appeal to a lot of the younger generation, the millennials for now. And what Nike did was, they said, look, just go out, I don't care about anybody else, just not care about Manchester or Liverpool, just go out and make an advert for London. And Wyden and Kennedy sat down in their team room, and what they tried to do was, they sat down and thought, okay, shall we be safe or not? How do we do this? And they thought, no, let's actually go out and speak to people who are the culture, who are the millennials. And that's why this Nike advert became one of the best adverts of 2018, if not 2017. So my point really being is that, as a fintech company, we have to really try and understand our culture and understand what we're doing. Now, these things: relate, communicate, educate. Communicating your message to your audience is really, really important. And the 3 things that I really understand and really know is that relating to your audience. So my clients have no idea about ETFs or financial shares or stocks and market. They don't understand anything about the marketplace. So it's my job as a man of ethnicity to try and relate that. So we have to relate, because once you relate to your audience, you can actually build a relationship. Once you've built a relationship, you can actually communicate. And once you communicate, you can actually educate. And that's really what we're about. Right, that's it, I'm done.
Hi, everyone. So I guess I didn't bring a deck, but I'm going to try to do my normal deck from memory. So I'm Victor, I'm the founder of Plum. This is the website behind you. So I guess the story started with me when I was in my early 30s, and me and my co-founder realized that we were in our 30s and we both didn't have any savings, or any substantial savings. We thought that was pretty ridiculous. Why didn't we manage to accumulate savings while we were already in our 30s, and the real answer was that we were busy living our life, going along what we were doing, and never really thought about the future. So we decided this is probably a problem that more people have, right? And then we did some basic research and realized that there was around 100 million people in Europe that have less than 3 months in savings. There's the majority, 50% of savings earn less than inflation. And then there's like something like 100 billion that's lost on people overspending on utilities and other bills. People basically get ripped off, right? And we realized that the reason that people don't do this is that people are kind of like, there's inertia, they're stuck in what they do. And coincidentally, this guy called Richard Thaler won the Nobel Prize in economics about the power of the nudge, right? So, which is like the psychology of making people do things. So we decided, let's start building a business that does just that, right? So fundamentally, what Plum's mission is to make you better off. And the way it does it is, it was nice that the person previously talked about how these financial diaries, but basically people simply connect their bank account into Plum. We get to see their history of transactions, what's going in and what's going out. And just based on that, we automatically start saving money for them. So there's no need for any additional input from the individual. We're just predicting how much money you're gonna have at the end of your month, and we're moving money once a week on average in small amounts that end up into your Plum savings. And this is what's happening here. And as we're expanding the business, we view the business as having like 3 pillars of financial well-being. This is what we're trying to deliver, which is kind of what Max kind of brought up, which is basically savings is number 1, which is why we're making it incredibly easy for people to save. We just use their data and save money for them. Once they do have savings, we give them investment options for them to grow those savings. We currently have RateSetter, which is a peer-to-peer platform that allows you to earn around 3%. And there are more options coming on that domain. And then finally, the other big thing is we make sure that you don't get ripped off. So we will analyze your bills, see if you're overspending on your utility bill, on your credit card, if your overdraft is ripping you off, and suggest other alternatives that basically cost less. Yeah, I forgot to say that, so previously I was one of the early employees of TransferWise, and basically saw that fintech, since we're talking about fintech was being disrupted in various verticals, right? Disrupted in payments, TransferWise was moving money around very easy. Places like Funding Circle or Zopa were allowing people to take loans at a cheaper rate. Places like Nutmeg were allowing you to invest your money, but it wasn't all coming together, right? There wasn't this overarching layer that basically tailored that advice to yourself. And by simply plugging in your bank account to something like Plum that is using intelligence and AI to figure out exactly what you're doing with your money, we believe that we can deliver all of those services under one kind of umbrella. So we started around, we've been live for around a year. As you can see here, we have around 100,000 people that are on Plum, saving money automatically every day without really thinking about it. Some of those people are choosing to grow their money by investing. So we're growing and looking to kind of bring easier financial advice and health to people on a global basis. So that's us. Happy to take questions if that's the deal now.
Right, is this on? Turn it off. Hello. I'm Simon, CEO and founder of bricklane.com. I'm afraid I also haven't done my homework, but I will talk to you today about saving for a home, which I'm sure a few of you, if there is any millennials here, know can be a bit tough. So all of this came about through my own problem, as is often the case. So I started my career working in consulting. I was working quite hard. I was effectively in the use cases that some of the guys described earlier. So I was actually managing to put money aside, which is non-trivial in London at the moment. But in effect, it was all in cash. I didn't really have time to learn about the markets. Didn't really feel comfortable with it. And it was actually during a sort of interesting year for the London property market where the average house earned more than the average person. So it was this kind of ridiculous place where basically, as has often been the case with the property market, if you were already on the ladder, you were doing really very well, and if you weren't, it was effectively getting further away. So, and really, again, all I wanted to do, I took a lower salary, I wasn't saving as much. Really, all I wanted to do was park the amount of money I'd saved somewhere and it not fall behind. Yeah, like, so, you know, I just wanted to keep pace with it. And all of this is kind of like, I wasn't looking to blow the doors off. Yeah, like, I wasn't looking at that 1,000% return if you time Bitcoin right or anything like that. Really, all I was looking to do was kind of save in such a way and invest in such a way that it would help me achieve my goal, which was buying a house. So that's where all this came from, and this is the sort of use case that's certainly closest to my heart. We obviously do quite a lot of different stuff now, but you know, I'm sure a bit like all these problems people have talked about this evening, I don't need to tell you that saving for a house is hard. You know, if we just talk about London specifically, the average first home deposit in London, that's now £100,000. You know, whatever the government does, it doesn't really make a huge difference to that. Stamp duty, holidays, etc., etc. You know, and that's the price of a pretty top-of-the-range Porsche. You know, if you want to get onto the housing ladder, we're all saving for Porsches at the moment. And as some of the other guys have alluded to, you know, people save hard. Like, you know, people will do second jobs, they start taking lunch in, you know, some of us buy avocado on toast, but, you know, that's held against us forever. But we, broadly, people save pretty hard. And I suppose one of the moments of truth for me was just by being better with your money versus doing the easiest thing, which is broadly cash, can have this kind of transformative effect on when you buy a house. So, you know, if you just do a bit better than cash, you know, we can work through a case study later if anybody's interested, but you know, you can save like yourself the order of 5 years. You know, you're getting to a stage now where to save that 100k, you know, even if you're doing really pretty well in London, it'll take you 15 years. And in effect, as that number gets bigger that you need to save, and it takes longer to do, newly first home savers have a financial services problem. You know, when it took you 2 years to save and it was a lot less money, you don't really have a financial services problem. You can just put it in cash and forget about it. But really, all like, you know, you invest 100k in the stock market, you're a high net worth investor. So people newly have this problem. So we wanted to make it available to everyone to just participate in the property market. So the way it works is you come onto our site, you can put various other sites that I'll talk about shortly. You can put £100 plus in an area of your choosing. We operate 2 funds, London and the regional capitals of Leeds, Manchester and Birmingham. You keep pace with whatever happens to the price of the properties we own, and you get rental income on top, and we've outperformed the market so far, which is quite good at buying property. And effectively, you know, you can set it and forget it like some of the robo-advisors, wealth managers, etc. So uniquely, you can put it in an ISA, which is super important because, well, look, ISAs are the nation's favourite way to save and invest. That's my theme tune. We're also the only thing that really behaves like property. So there are tons of things out there that nominally will have property in them, but you get a whole bucket of stock market volatility, which if you're looking to track the market, you just don't really want. So let's not show you a video just now, but like, I think, you know, we've been going for 18 months now out in the market. We're lucky enough to be backed by some interesting investors. We get a lot of investors through Zoopla, who we have a deal with. Guys from Innocent invested in us, so very helpful with branding. We were one of 10 companies to watch in the FT Future of Fintech, which unfortunately was won by a small company called Ant Financial. Yeah, look, we've been helping people do what it says on the tin. So our investors range from, someone did it on their 18th birthday a little while ago, which is the first day you can do it. So they're clearly quite worried. And then that goes all the way up to more sophisticated investors. And I think we'll talk about it later, but one of the things that certainly I've learned about millennials and fintech is, you know, people don't want an early learning centre investment product. They want to know that serious people are using it who kind of know about these things. So, you know, we have everyone from 18 to 80 plus. I obviously use it fairly heavily, and as I say, we're sort of doing what we said we'd do, which is keeping, providing the best way to get access to the property market, actually getting people ahead of what the property market's doing at the moment, and hopefully helping people save some houses. But it's not one of these things that you can get done in 10 seconds, a click of a button. It takes 5 years, 10 years plus.
Tradition We Are FinTech events to kick off by just trying to get under the bonnet, work out who our speakers are, and my favourite question for this is just asking what the coolest thing they've seen is in the last 12 months. There's only 2 rules to it really. It can't be the companies of anyone here tonight or your own, and it can't be your children or anyone in your family. That's cheating. But it's great to know what excites you, so if we keep it relatively quick, we'll try and get through more questions, but just if you could bring to light anything that's really turned you on, excited you, or impressed you in the last 12 months.
So I would probably have to say, and I'm kind of over it already, but I was really into it for a while, was this game called HQ Trivia, which maybe some of you have played. And I think I was interested by it because I like this sort of, so basically, do you guys know, or should I explain what it is?
Maybe explain.
Basically, it's like kind of like Jeopardy or whatever in an app. It's, I think, a couple of times a day, maybe like twice a day, at a certain time. Everybody logs on, and then they have a live video stream of a host who basically asks you a bunch of questions. And they start off really basic, and you're like, oh, this is super easy. And then question 3 is like, whoa, like who would ever know this? And then they get a bit easier again, and then I drop out. But whoever wins, whoever gets 12 questions right, can win up to like $10,000. And I think what I found really interesting was this like live element, and combining like the online and the offline world, and like really getting this like suspense up, because there's like a countdown and like 2 minutes to go. And it seemed like one of those things that if somebody were to pitch that to you, you'd be like, ah. But then if you see it in action, you're like, wow, this is actually really cool, and I didn't think this was going to be cool.
Cool. I'll be unfortunately more fintechy, but I think in the last 12 months, I think for me it was crypto, bitcoins, ethers, etc. But clearly not just the rise of these things, but more so, I was always a skeptic, but I think like these concepts of like new ways to organize companies, the new ways to organize how information flows, and basically how to take a lot of middlemen out of the picture in a decentralized way is quite interesting, especially in finance, right, where a lot of these things started, but they extend to a lot of other markets. So yeah, I feel it's something here to stay. We're thinking about how we can use it in our business, but it's more how it will transform the way we what things cost for us individually, and how we do business and stuff. So that was my coolest thing.
Cool. Mine was the energy company Bulb. So I think they've been around for a little while. I joined them quite early, but just seeing how they've managed to kind of do this amazing thing where they've got more people using green energy. You're having this like incredible commercial engine behind it. Like it's cheaper as well. You want to tell your friends about it, and how they've just kind of married being a business and kind of the momentum that comes with being a business, so you can sort of support yourself. You're not relying on anybody else. But in such a way that it can do a sort of good, interesting thing for the world, which hopefully everyone will sign up to.
So I work out of a hub in Brussels called KBC. Started at KBC. So there's quite a few very, very clever guys and girls who work in this hub. So there's one guy who we met about 8 months ago, and he actually invented a light bulb, which is a purple light, that helps plants and agriculture grow 20% faster. The idea of what he's doing with agriculture in foreign countries, for example, is amazing. He's listed to be one of the sort of superstars of KBC, started for what he does. But I think my fascination is with things that are more social, with things that can help a bigger economy or a bigger group of people. So what he's done with his technology to help agriculture, to help sort of the farming community in poorer countries, for example, has been quite fascinating. So that's quite, and he's got he did an experiment. He's got literally a little greenhouse where he's got this tube, and he's got he's got plants, and one's not under the light bulb, and one is on the light bulb, and you can see the difference. So I mean, you know, I think he should go to Colorado and make a fortune.
Nice. Thanks very much. Really interesting examples there. Next up, we're going to bring it a bit back close to home. So we started off the evening talking about the dates we were born, what generation we're in. Arguably, though, I'm wondering these terms are possibly redundant. Being millennial is arguably more of a state of mind than depending on which year you're born. So I wanted to bring it back and think about how you're targeting your audiences and what kind of segmentation you're using. My hypothesis is that age is kind of irrelevant. Would you care to engage on whether age is relevant or not, or how you're segmenting your audiences? Perhaps we'll keep the same order.
Yeah.
Sure, I think, I mean, it's always hard to segment people, but I guess like there's 4 groups of users that we see. The youngest one is our students, and so they're just curious about it and they kind of like want to dip their toes in it. Then sort of one above that is the so-called Henrys, so high earner not rich yet, so the people in their 20s, 30s, young professionals who haven't really settled down yet, who are essentially cash rich but asset light or asset light. And then you have people who are a bit older than that, who've bought their first house, who are now worrying, you know, how can I afford my lifestyle? Maybe they had their first kid. And then you have like proper professionals, and then sort of in the 50s, and then above that we interestingly have quite a few, I don't know why, but quite a few people who are in retirement and are asking us to help them with their retirement. But our key demographic are these people who are cash rich and asset light, because kind of the way we think about financial advice or financial guidance, however you want to call it, is there's essentially, I like this analogy of going to the doctor and going to the hospital and going to the pharmacy. So if I have a cold, I don't go to the hospital, I go to the pharmacy. If I have just a bunch of savings, I don't need to go to a financial advisor or to pay them a bunch of money. As we discussed before, it's not really rocket science. You just there's like fundamental information asymmetry going on, and that needs to be leveled. And doing that requires a bit of work, and so we're here to help you reduce that amount of work and make it ideally fit into 3 minutes. And so we kind of think about, if you're in that situation, you could just go to the financial pharmacy, and that's kind of where we're starting off. And that's why that key demographic for us is the most important. Whereas, if you already have a house and you have way different financial questions that you're thinking about, maybe how to pay off your mortgage earlier, or how to remortgage, kids' education, that kind of stuff, we probably aren't the best place for that right now. But we have partners in place. We have some of the oldest wealth managers in the UK who we work with, and we're happy to sort of make that introduction. But we wouldn't say that we're in the best position to give you any help on that, and we're pretty open about that. Maybe in the future we'll grow old with these clients, but right now, sort of that is our key demographic.
Yeah, no, I mean, we don't, I guess we view that everyone should be saving, everyone has can get a bit of a hand saving, so we don't really distinguish people on an age group, with age group. Like when we first launched the product, I remember we had like a drop down where you used to choose when you were born. And this was like before we had like our first 1,000 users, and then someone basically emailed, tweeted, and wrote to us on support that the drop down didn't go low enough for their age. So I think it went down to like 1960 or something, and then they complained that they couldn't declare their age. So then we just made it like you'd fill it in. So it's quite across the board. The people that are attracted to us tend to be people, in their like late 20s that are starting. But yeah, from a like growth perspective, we think in terms of 3 channels, we have like one channel is like kind of buzz, so making sure that we're heard and people know about us, and it's also driven greatly by building a good product. And then we also let people invite their friends and incentivize them to do so. And then finally, we do some classic paid marketing as well. But yeah, it's across the board, the age group at least.
So, we're obviously it's an investment product, savings problem, I would say, which means that you're effectively catering for a certain section of the population anyway, that's lucky enough to be able to put things aside. So we don't help with that problem in the same way that some of these guys do. We're going in effect, the platform does the same thing with whoever you are. There's not that's part of the point of it. So we tend to think about what you're probably using it for. Below 35, there's a pretty good chance you're using it to save for a home. Majority of our customers are under 35, and then there's a sort of everyone else category, but you can be whatever age and just using it to sort of get a return, whether it's better for tenants than is currently the case, which I'm happy to talk about further. So we probably should do more, but we don't do a huge amount at the moment. But age is a good proxy.
So we really don't fit in the millennial camp at all, really, to be honest with you. So our clients, their children are millennials now. So how we started this, how it all came about, I didn't really do a good job. I apologise, guys, I made such a bit of a balls up with the first presentation. I just froze for a little bit there. So cap ratio came about really with the idea of that there was nothing really for sort of ethnic minorities or the underserved in terms of when you look at who's being served or look at the market or who the current incumbent banks and robo-advisors were marketing to. There was very few. I mean, if you look at the stats, there's less than like 1% of CEOs in fintech are ethnic minorities or black, really, versus 83%. So if you look at that statistic and then look at the marketplace and go, well, like, who's being served and who's not being served, you'll see a disproportionate gap in the fact that most millennials going forward won't be served as well as other clients or other millennials in the marketplace. So we thought, look, before we even build anything, because we're the youngest out of the team, we've been around just under a year, but our technology's just finished, so we won't be going live until probably August. So we've got, and then we've still got to be SFA regulated yet, which is ongoing. So before we got further and spent any money, we built a Facebook group, and we thought, right, let's go out there and find who our audiences and ask some really deep and difficult questions. So within the matter of 6 weeks, we had 1,000 people join our Facebook group, which we called Income Revolution. And we were just saying, look, are you saving? Do you like saving? What's your attitude towards banks? What's the most annoying thing? The feedback we got was really, really interesting. So a lot of our biggest audience is, to be honest with you, 35 to 45-year-old women. So 35 to 40 female category is our biggest users or interested in sign-ups basically for our platform. So I think Facebook has been our biggest discovery of who our audience is. And then being able to continually, every day, create agile, sort of lean processes to build our platform by asking questions. Do you like that? Do you not like that? Does that work for you? Would you use this? Would you use that? And I think that's speeded up our process to building a platform faster than most people, really. And being really outside the box. We don't really conform very well. So, as you can tell from the presentation, we kind of don't really fit in the kind of nutmeg, money fund, multiply box. We do the same job very well. We work with ETFs and work with some of the best portfolio managers, but we kind of serve a different class of people.
So I was also going to check in open banking. So open banking's new regulation, for those who don't know, came in 13th of January. Basically it means customers are able to get their banking data and share that with other companies who can provide services based on using that customer's data. I wanted to put it to the panel, how do you think open banking is going to make a difference for younger generations?
So I don't know.
Yeah, come back that way.
I think with open banking and GDPR and sort of especially within from my point of view, things like MiFID II, GDPR reporting, access to data is really important. I think those who know how to manipulate and use that data is going to be quite powerful. I think it's going to be a really good tool. I think most people are learning about it now and understanding what it actually is and how it can be used. But I think for companies and for those who maybe want to sort of use the data more beneficially, I think it's quite good access, quite a good tool. So it's going to be quite important.
So look, it is sort of not directly relevant to what we're doing, but I suppose it's a sort of holistic picture of your financial life point. I think is what a couple of these guys have spoken about. I think my big point with data is where everyone goes mad for data, The first section of my career was spent trying to help big corporations with lots of data make any sense of it at all. I think the data's not going to do anything on its own. It's companies like some of the ones here who will actually make a difference to people. You don't make a difference by legislating. I think is my big point about it.
Yeah, I mean, for us, clearly, open banking is pretty critical. I mean, we're built on that data. So I guess that data was accessible beforehand with another way to access it called scraping, which someone would kind of, still similar, but like someone give you the password, you'd encrypt it, and then you get the data. Now open banking is putting like more regulation on it, so it's more like controlled, which I believe is fantastic because it means that more people will be more like open and understand what sharing the data means. And then, as Simon said, it's all about what you do with the data, and that data is critical to us to do what we said: help people save, invest, and then make sure they don't get ripped off. And I think regulations like this take time to take hold in a society, but I think because of this regulation, in 3 to 5 years, I think you'll see a completely different landscape of who helps people with their money or who manages people's money, because you can start using whoever you want. You can consolidate everything into the player that you think can help you the most. So,
I agree. I think from my point of view, been quite a lot of buzz and hype around this thing. Let's see what it actually does. And I kind of agree with what Simon was saying, is the data and the data quality is super important to any kind of data integration. And most companies can't even figure out way more basic data problems. So I'm curious to see how this one plays out. If it works out, amazing. But I think it's way too early to tell.
Great. So I've got one more question before we come to you guys. I hope you're all ready with questions for the panel. This should be really quick, but can you name drop any countries that you think are ahead of Britain in terms of fintech for millennials?
Germany. Massive. 37 robos, untold N36 is an online bank. So Germany has got a really big foothold in terms of how they market to millennials and what they're going to do for the next generation. So I think Germany is one to watch in terms of how they generate their technologies over fintech.
There's cool companies in the US as always. They're doing a lot of stuff, but the UK is good because it has the infrastructure of the regulators very welcoming to new ideas, and open banking is a new idea that's the first surfaced in the UK. So the environment's appealing to do stuff here, new stuff.
I think in terms of the infrastructure and in terms of the offerings, it's, in my point of view, for sure, the US. And I think what's really interesting is what Switzerland's doing with crypto. But I'm not a crypto expert, but what I hear what they do sounds pretty promising. So.
Cool. Anyone want to shout out some other countries you think we've missed out?
China.
China, Poland,
India,
India, Kenya. Oh. Cool. So over to you folks. I'm going to swap mics. Great. So who's first up? I think someone back there.
Now, you also mentioned that robo-advice is easy, right? Risk-based investing. Now, as far as I'm concerned, robo-advice is a total misnomer, right? And it's actually not financial advice. And putting your money into an ETF is easy, and anybody can do that. So, if you guys plan on expanding out your investment options, right? What does financial advice look like to you guys, right? Because you've got news providers. So what makes you guys different? You talk about expanding your investment options. What makes you guys different, right? You're giving people option to invest into property, so what makes you guys different? And you guys are a robo-advisor for the underserved market, but they're robo-advisors where you can start, where they have no minimum. So what makes you guys different?
I mean, I'll try to answer that. I think investing is investing. I think is in a way simple once you take the step. It's just a matter of access and kind of understanding, right? The philosophy behind investing is mostly do nothing, buy stuff and forget about it, right? If you're thinking about long-term investing, right? And yeah, you can buy crypto and you can buy specific stocks and decide to focus on specific sectors. Historically, it hasn't proven to generate, greater returns, right? So the main thing is getting on the boat that's rising, kind of like what Simon said, and then stay on that boat that's rising. But I do think there's interesting investment options that become new from time to time, and what we see our role a tiny bit is not necessarily giving. We don't want to give advice necessarily, but we want to give access. So I think access is the main problem. So like someone that's saving with Plum might not know about Simon's startup and might not know to put money in Brick Lane, and bringing that access to the table, kind of explaining it and making it simple is kind of what is interesting to us. So there'll be innovation, but there's a lot of stuff you can read about market theories and whether or not you should actively trade or not. But I think access is an important thing for us.
Because you mentioned us, I'll follow on. I think taking one of the specific points you made in your question, we're kind of different to some of these other guys. We obviously have our own platform. Frankly, as Victor said, if in 10 years' time we're 95% distributed elsewhere, and we're solving a problem for people associated with the housing market, and it's going through advisors, it's going through banks, it's going through robo-advisors, we're kind of easy. We'll expand geographically, obviously, we'll add interesting developments in the financial product, but I suppose we're playing a sort of slightly different game, which is we don't want to be the centre of your financial life, we want to solve a problem associated with the property market, and it could be that these guys offer us in the future, who knows, but we're that's the game we're playing more than trying to get into advice, I suppose.
Yeah, I mean, I don't know, I don't really think about it that way. Why would you start a business to be different? I think we want to start a business to solve a user problem. Yeah? So we have now nearly 200,000 people, like I showed you guys. We speak to these users very, very heavily, and they all have the problem that we're trying to help them solve. So whether we're different to player A, B, C, to be honest, I don't really care, because they're not solving the problem of my users. And I think that's what we're focused about. So I think I would frame it a bit differently. And I think part of the problem is exactly, which I guess is sort of at the essence and at the core of what you're saying is, there are so many different products out there, and there needs to be somebody who can help you navigate through the financial jungle, as I like to describe it. And I guess there's different companies tackling it from a different way, or from a different angle. But I think focusing on genuinely solving somebody's problem, rather than just bringing a new product to the market to be different, is kind of how we think about it.
Yeah, I completely agree with what Max said. I think we had to look at, we start with our audience first. So yes, we're a robo-advisor, yes, we do mutual funds and ETFs, but our audience has a very different pain point than most, really. So we looked at what was going to make us or stand out or be very appealing to our audience. And most companies in the robo space will build a platform first and then talk about the platform, say, we've got this technology, we use this and this and this, and shotgun the marketing to everybody. That's why Nutmeg spends 250 grand a month on ad campaigns and advertising. I think for us, what makes us different is the fact that we've got a very narrow but very specific pain point, and we understand our market. We spent 6 months really talking to our clients and understanding what was their pain point. For example, in the West Indian community, for example, when a loved one dies, they have a funeral fund. So basically, the family puts money together to help bury the loved one that's died. That's very, very much a common practice in, I think, West Indian and African communities. Not so much in sort of modern day sort of Eastern European communities, but the idea that we created a specific fund for that was a huge success. The fact that we looked at specific pain points in that community and said, look, okay, well, we're going to create a fund, or we're going to create a technology that's going to look after your pain point, was very unique. And the idea that we were very much client first. The client is at the heart of what we do. We build the technology around the client, not the other way around. Not build the technology and go, right, we're going to stuff it on there. So I think our attitude and the fact that we're able to do that means that we kind of separate ourselves very easily the fact, I mean, you know, we don't want to be like everybody else. We don't really care because we've got our audience, so we want to look after them first. And you know, and I think the fact that we've got a very, very different market. I know that one of the things that happened in KBC a while ago, I'll tell you this quickly, was I had a boardroom, so every 3 months you're going to go and do a pitch in front of the boardroom. And one of the things that was what came out after we did a pitch was the fact that they thought that we were sort of oil snake salesmen and trying to target the poor and vulnerable, and we were going after the benefit guys and still sort of, you know, trying to steal the benefit money into high risk ETFs and that sort of thing. And that was the mindset of quite a few people, especially a lot of VCs and angels, really sort of don't understand that the underserved, ethnic, and what I call sort of under 22 grand a year market really have a very different lifestyle than most and have different pain points than most. And I think what Victor said, access, giving people access to the market is very important for us, because don't forget, historically, the incumbent so financial exclusion is a massive thing, you know. Financial exclusion and the idea that you are financially unattractive is currently what the status quo is about today. So we try and smash that. Poverty premium, the idea that it costs you £1,300 a month to be poor, to basically live on benefits is expensive. So all these social, economic issues that are not tackled by the big robos we look at, and that's what makes us very, very different.
Great. Next up. Any more? Yeah.
Throw it, go on. It's throwable. Yay. Hi. Does it work? Yeah, it's just about. So a conversation that we've been having here at Team Spirit a lot, and I think me and my friends have been having a conversation about a lot, is this idea that millennials, be they Finteens or not, are kind of interested in a more ethical form of investing. Be it that sustainability, be it diversity, be it actual activist investing in some way. And then in terms of actual research we've done, it's a pretty mixed bag. And it looks like ethical investment is a luxury, and it's something that you can sort of only do once you've got the cash to splash on it. Is it something that you guys are worried about? Is it something that your business models focus on or centralise in any way?
Yeah, we're doing that. We've got quite a lot of our clients. Again, so our audience is just out of the millennial bracket really, or slightly older, so sort of 34 plus really. But that's a common question, is the ability to choose where you put your money. So you can get Christian ETFs, you can get vegan ETFs, you can get gold, whatever. The universe, which is expanding by about 30 billion a year in the ETF market, is becoming the number one sort of asset class to put your money in. So yeah, we kind of lean towards the ETF market rather than crypto. Crypto for us is something that still needs to be proven. Would like it, but I think the idea that we can go to clients, but look, we've got a vegan ETF, or we've got a ethical, non-alcoholic or non-cruelty to animals sector of society that we can invest in for you is very nice, and we like to appease that. So I think that's definitely what we're working on.
Yeah, so for us it's an absolute imperative. As I mentioned before, we buy houses, we rent them out, so it's people's homes on the other side of it. So the headline is that we're already doing everything mentioned by politicians of both colours for commercial reasons. So we're already offering 3-year tenancies with fixed rent caps, basically, albeit if you're Jeremy Corbyn and you say that, everyone goes mad, but we're already doing that for commercial reasons. We were already not charging tenant fees pre-move-in before it got mentioned by the Conservatives. There's this nice circular bit of our platform that means not only do we do this for commercial reasons, but also the people, the majority of people using our platform we think are saving up to buy a house, and they are doing it by owning property together, renting it out to more people that are owning houses. So there's this kind of nice, you're renting from people that look like you thing. Various people care about it variously. I think you don't have to be super engaged with the platform, you can set it and forget it, but I suppose for what it's worth in our industry, you can't, we would never do anything else, and it's always been core to what we're doing anyway.
Yeah, and for us it's an interesting question, because I think it's just that people should know where their money goes, and they should have the choice of where their money goes. That could be ethical, that could be whatever, and again it comes back to us, we know that that's what people want, right? It shouldn't be something that some person that fund manages your money, I don't know, in your pension or in your in your ISA decides where your money goes. If you want to get engaged with that and then have a say, you should be given those options. And again, for us, it's all about giving those options to people, and having heard that, having heard the millennials do want to know where their money's going. So that's what we're going to offer. Nothing meaningful to that.
Is it Simon? Sorry. Just following on from that question, really, being ethical and so on, do you think with bricklaying, I'm not saying it is, being devil's advocate, it could be slightly counterproductive in helping with the increase in house prices?
It won't surprise you to know I've had this question before.
Yeah.
So look, we, the example I always give, okay, it's a £7 trillion market.
Yeah.
It's bigger than equities and commercial property combined. It is just, to all intents and purposes, bottomless. So for us to ever make a difference on the market, we'll have to be putting 100 billion to work in a given year. Okay, like it takes a lot for us to move it. But I suppose philosophically, say we do. Okay, say suddenly we move it 5.1% rather than 5%.
Okay.
We, look, and not everyone has to agree with me on this. I personally would much rather have a market where it's moving 5.1% and the entry ticket is 100 quid, rather than 5.0, and unless you've got 100 grand in your pocket, you're completely shut out. So look, I mean, it's my philosophy on this has always been, you can sort of stand on the sidelines and complain about it, or you can get stuck in, and that's what we've chosen to do. Look, I think that, and this is probably getting a bit more expansive, home ownership is one of the biggest, most subsidised political clubs in the UK. It's over half the nation's wealth. You cannot be the government that fixes it, really. I'm sorry, this is very doomsday, but if I thought the government was going to fix it for us, the need for, certainly my use case, goes away. If they fix it, they've got whole new problems. Suddenly people aren't retiring property millionaires anymore, so you've got a care funding problem. How are you going to pay for an ageing population that can no longer sell their house and pay for care, dementia tax aside? So look, we buy houses, and some people will just hate that, whoever we're buying them for. So we're not trying to convince everyone, but for what it's worth, I have fairly strong views on it. I've made my peace.
Thank you.
Cool. Probably time for one more.
Sorry, the whole idea about accessibility for the fintech app that you guys have is relatively novel, but I'm just curious in regards to accessibility. How do you ensure that the people that place trust into your app is well secured in terms of their deposit, and also how do you ensure, is there any mechanics within your apps or your company itself to ensure that the money that go into your company is actually clean money and not laundered money and things like that?
I think we as a company, Cap Ratio is has to be one of the most heavily SFA regulated businesses ever, because we're dealing with not only with client money that comes in, but also with regulated products. So how most robos work is that they'll have a custodian, which will normally, our custodian is Deutsche Bank and RBS. So we've decided we won't ever hold client money. So what happens is when you invest, the sort of 1% that we get from under your assets a year is paid to us by the custodian, who are heavily guarded and have got all the money banked with them really. Also, we're governed by the FSCS, which means that for every 80,000, 100 over 80,000 of your money that goes into any of our products is guaranteed by the government. And also we've got very strict AML and KYC protocols, which means that when you sign up with us and you're happy with us, you will then get another form to say, well, look, this is we'll ask your ID and your passport and all that stuff. But also there's an onboarding process. That means that there has to be a paper trail of where your money is coming from. So you can't just come to us and say, right, we're going to give you a credit card with 2 million on it. We have to sort of go through your paper trail. I mean, there's always limits of how much you're depositing as well. Although it's only £1 to an account, you can then on the platform decide how much you've got, and within that amount we've got sort of algorithms that will trigger and flare up and say, well, okay, this guy's going to dump sort of a million or 50,000 at one go. Let's give him a call and find out what's going on. So yeah, it's very tight because we're governed pretty much tightly by the SFA. So, and also with MiFID II, MiFID II is really good. So what we like again about our business is that we close cash every day. So we reconcile our positions every day. which means that we never roll over, we never have overnight positions. So if you invest in one of our assets, it's not going to roll over the night and wake up with a different sort of price in the morning. It closes out that day and that night. So in the morning you can find out where you stand, which will be the close of the day yesterday. So very tight procedures.
Yeah, look, in the sense that I think we all deal with retail customers. AML, KYC is super stringent. If we wanted to set up something for rich people, it would have taken 24 hours out of Ireland. You can do it very quickly. This took us a year to set up. So we've got all the same KYC points. We're governed by the FSCS as well, covered by it. I suppose for me, if we talk about fintech specifically and things that we can do that others don't, one of the things, so we work with various kind of publicly traded big companies, so like Super, and one of the things we had to get them very comfortable with was people know what they're getting into. And you can buy, if you want to buy a commercial property fund, not that I think that's a particularly good millennial product, and you want to buy it from Legal & General, you can print off a form and you tick a box somewhere saying you've understood the risk and it's all in 0.8 font. One of the big things for me about accessibility and safety is, because we're online platforms, you can literally stop people signing up unless they've signed off on the big risks actively. I think there's such a duty of care point to all of this that says, we made the decision very early on, our risk warnings are pretty aggressive. It's one of my big points to the team. You need to buy your disclaimers. There are plenty of people that will say past performance isn't the guide to future returns underneath a graph that basically implies it is. Our point was always we'd rather have a business that's 80% the size, where 100% of people understand what it is and what it does, rather than take that extra 20% on top for a bit of quick growth. It's sort of, that's what all of that means to me, I suppose.
Not much to add, yeah. There's a lot of regulation around it and things are governed.
Rightly so, yeah?
Yeah, exactly.
Cool. Great, may I borrow a mic? That, I'm afraid, is all we've got time for tonight. So first off, massive thanks to the panel, please. Just to let you know, 20th of March is when the next event is taking place. So we've got How VCs Think and Scale Up Tips. We are okay to stick around a little bit longer to have further discussions and questions, but we do need to be gone by 9 o'clock. There is a follow-up for anyone who's interested. The City of York, is that correct? Nearby, so if you're interested in following conversations on after 9 o'clock, that's where to head to. That's fantastic. Thanks very much, everyone. And we look forward to seeing you again soon. Finally, one more hand for the folks at the front.